Welcome back, all, to Wall Street Beats. Here's our roundtable. I'm your moderator for this session on October 14th, 2024. We're keeping it tight today. We got a concentrated team of brainiacs, including Berna Barchet and Russell Young. Of course, I'm Paul Meeks. I sometimes talk tech, but so does Russell. So let's get started here. Berna, let's start with you. I know that you're looking at three key events in your sector. You got LVMH, Netflix earnings, Ulta with an investor day. What do you think about this stuff?
Well, the Ulta is more of a sort of single stock company specific situation. I think Netflix is going to be a really interesting event this week, just to kind of get a gauge of how the market is approaching earnings, because across a bunch of sectors, but notably tech and consumer, we've seen in the second quarter cycle, we saw companies come in, that were kind of momentum, sort of stocks that everybody loved, everybody owned, safe stocks. I mean, like, Nvidia being, sort of king of those kind of stocks right now. And and great wasn't enough in the second quarter. So I think we have a similar setup with Netflix, which is having a fantastic year. I'm looking to see how much it's up this year. It's up 49%. It was up a lot last year. It's been up at 3.5 bagger from the bottom in May 2022. So we know everything's good there. The estimates are probably going to be beat. They're going to raise. Everybody's companies with inferior services are raising prices. So why shouldn't they too? Like, everything's adding up, and you have, two football games on Christmas. You have this Jake Paul, Mike Tyson fight finally happening in November. You have WWE coming in January. Net ads are going to be 8.2 million, or more, margins 28% now. But the question is, like, what's next? At 8 times sales, 30 times EBITDA, there's nothing wrong with this company, but it is reflected in the price now. So, I had been a buyer of it, when everyone hated it, was selling a little, and I finally let it all go, in the high 600s, knowing that I was probably selling in the seventh or eighth inning. But for me, the risk reward had shifted because, I remember the time right before May 2022 when people just thought that they couldn't miss. And, when it was 600 the first time, and the value, and I was very bearish then, the valuation didn't make sense to me. I mean, now I think it is a better company now than it was then, because the competitive environment has shaken out. We know more about it. But it's also a more mature company. So, to me, like, I sold it to raise cash to buy things that I think are cheaper. I think the market is interesting now in the sense that there are a bunch of really beloved, we talk about it all the time, like the sort of nifty 50 aspects of the market, that the companies that don't miss earnings, that are growing, that, there seems to be no ceiling on their valuation until there is. And then on the other hand, there's a bunch of stocks that are more problematic, more volatile, more complicated, that I think are, there's a lot of good bargains. It reminds me of 1999, 2000, not in the sense that, Nvidia is not Cisco. I reject that. Netflix is 30 times EBITDA is not crazy like how some other companies were, and these are good companies trading, at stretch but not insane valuations. But there's, really bifurcated market where there's a lot of stuff that's interesting, bubbling below the surface. And so I sold it because, the reward, it's funny, it's the difference between, magnitude and probability. The probability of the stock, doing well and going higher is probably very good, but, sort of the risk, if you're wrong, there's just no cushion. There's no margin of safety anymore. And, that still matters to me. It's not very fashionable to care about margin of safety anymore, but I do. So anyway, I just think it'll be really interesting to see how investors react to what should be a great quarter, but one that's priced in. So that's sort of what I'm
So,
looking at it.
let me, before you move on to your other two, Russell, you have some thoughts on Netflix?
Yeah, I mean, I understand Verna's Verna's concern on valuation, but it's interesting the business model right now, right? Because they're in this virtuous cycle where they can raise price and try to force people into the AVOD platform, and people want to see the AVOD platform going. And so, I mean, Netflix is doing so well, and linear TV is dying, and the future is now going to be streaming between Amazon, Netflix, and who else can survive, right? And so I think we're going to see this huge consolidation. I think this is the concern, valuation, but the power Netflix has is kind of extraordinary. And I don't know, it'd be like I was watching Ben and Nadine's podcast yesterday. Just think about it, and they're interviewing Hugh Hendry, and his big idea is the market is a paradox, and this is a perfect example of is Netflix fully priced in, and they're going to have massive price power, and I don't know if we really know what Netflix's power is going to be. So I hear your concerns. I'm long a little bit too. But I
mean,
think they own the future still.
I think it's interesting. This death of linear, I think, is of course a big topic, but I think that there's other ways to play it that are you have Google and Meta at half the multiple of Netflix, and YouTube
right.
is I mean, obviously it's not a pure play. I think we were fantasizing in the chat about the FTC breaking up Google, and then you could choose if you were buying YouTube or search or whatever. But YouTube is just as strong as Netflix, and no matter what some of the parts you do for Google, you're paying half as much for YouTube as you are for Netflix at this point. So I think there are other ways to play digital video that get to the point you're making, but have what I worry about is where is the ceiling? It's clearly not 20 or 25, but is it 30, 35? Where are we versus that price ceiling?
Well, Berna, I agree with you, though I see a mistake, at least in my opinion, that some investors make. They say, okay, Netflix, granted number one, their lead is probably increasing rather than shrinking. So I got to go to the value oriented picks like Warner Brother Discovery and the former Paramount Global. No, right? Because those guys.
No.
How you guys in the space versus the king? Let's try to find something else to play away from the space, right? Or at least tangential to the space.
There's a way to play the death of TV and the growth of digital video.
I may be shorting the other dudes.
Yeah.
So, Berna, let's get into your other two.
So the other thing I'm going to be watching this week closely is Ulta, which is the cosmetics chain, which is, falls into this theme that I've talked about, sort of consumer fallen angels. There's this whole group of companies that were great growth companies for so long, and they've all stumbled this year. I put, Lululemon and Nike and Starbucks, we've talked about all these names over and over again. So, great companies don't become bad companies overnight. I think a lot of these companies are dealing with the same thing, is that they're transitioning from being high growth in terms of units and attracting new customers to being more moderate growth companies. It's a transition that a lot of companies have to go through. So you have, Ulta 33% off the lows. It's trading at 10 times EBITDA for a company that spent most of the last decade, 15 to 25 times EBITDA. But, it's not going to grow as fast as it used to. So it's sort of in this no man's land of not being a value stock and not being a growth stock. I think what's happened for them is, that they were opening units for a long time and providing a superior customer experience. People enjoyed being able to shop high-low in one store, sort of buy those prestige department store brands and buy your drugstore brands, because that's how people dress now. It's how women do their faces now, a Maybelline mascara with a Christian Dior eyeshadow,
That's what yeah.
I know that's what you guys do too, So anyway, but they're hitting the law of large numbers. I wouldn't count them out, but I haven't gotten involved in the stock because I feel like there's one more guide down. And when you get into a situation, I've noticed that, we've talked about CVS a lot on the show recently with David. We know that Walgreens is having a lot of trouble too. One thing I've noticed out of CVS, which I go to more, is unbelievable constant promotions on mass cosmetics brands. They're really, every time I get one of those, 5 feet long receipts at CVS that anyone who's ever been there has been familiar with, there's always like a deal on Maybelline, CoverGirl, all of that stuff. And so, I'm worried about, the trouble at the drugstores getting them more promotional. Meanwhile, you have Target getting sharper and sharper, as well as Walmart getting sharper and sharper in their cosmetics department. So that's the low end at Ulta. And then on the high end, Sephora has just been kicking their butt for, a while. Which transition, we'll talk a little bit about this with LVMH. So, who owns the Sephora. So I just think it's tough. I wonder if there's going to be a reset at this investor day. I mean, usually companies like to have an investor day when they have something good to say, but right. I kind of wonder if this may be some kind of reset coming in terms of growth expectations, in terms of investing I just can't imagine what they're going to say that's going to be, cause it to be a guide up. So I'm waiting to see what they say before getting involved.
I'm sure they'll talk about AI and maybe that'll be good enough.
Yes, we're going to have AI tools where you can
all over the place. Yeah.
Have a AI design your digital makeup, and then we will deliver to you by drones, I guess.
So, the investor day is this week.
What's that?
The investor day is this week.
It's Wednesday.
Cool.
And so before that, the other thing that'll happen this week is in terms of this stock, I'm on the sidelines. I'd love to have a reason to buy it, or I'd love to see it much lower with growth expectations reset, because it's a good management team. It's a beloved brand. It's got a huge loyalty program. It's got a great balance sheet. There are a lot of things to like here, but I just don't see what the positive catalyst is. So I don't know why I'd get in front of a huge event like this without a clear catalyst, because valuation is not a catalyst, not in this market. And, I'll also be watching LVMH tomorrow. Yeah. They report their revenue numbers. It's not earnings, it's just revenues. But I think, one thing is for the Ulta watchers, you're going to want to see what those numbers are for Sephora, so you can put the Ulta numbers in context. But I think the real headline here, given all the news of the last few weeks, is going to be, what do we see coming out of China? You're going to have to look at, not just the China numbers, but also the Japan numbers, because there's been a lot of travel of Chinese into Japan. That currency benefit of shopping abroad has narrowed somewhat, but it hasn't completely gone away. There's been so much news about stimulus in China, and, is it enough? Will they have to do more? I think LVMH is always a great bellwether for the Chinese consumer. So be watching that closely tomorrow. And, that's a stock. It's just, one of the greatest companies in the world, creating one of the dudes who's jockeying for richest man in the world, depending on how the tech stocks are doing on any given day. Company I always want to own. I'm looking, but I'm worried, given lack of momentum in the luxury market right now. I'm being very picky on price, and I'm looking for closer to 550. I got very close to pulling the trigger on that sell off. That it did get briefly to, under 600, but then, it went running when the Chinese stimulus got announced. A lot of the air has been taken out of that trade already. So another stock name for me.
Well, thank you very much, Brenna. Now, Russell, I'm not going to ask you about a elite consumer brand, but tell me what you know about Air Test Systems and the rest of the world that you cover.
Yeah. Hey, Paul. Air Test Systems reported on Thursday, and this is a company that does semiconductor burn-in. And so what is that? So it's like you are taking a chip and you are heating it and stressing the chip to get rid of everything that would fail when you put it in a device. And so this product is predominantly used in silicon carbide chips that go into cars. And so if you're putting 32 of these modules into cars, you don't want them failing and impacting the quality of the car and have the car have issues. So it's much better to pay the additional cost up front, stress the chip to make sure it's going to be more reliable once you put it in. Now, Air Test Systems has been a wild stock over the last couple of years. The main product they use is testing silicon carbide, and that is used in electric vehicles. And so the stock was ripping when everyone was excited about electric vehicles, and then excitement and sales of electric vehicles fell off, and so did Air Test Systems sales. But what's important now is the use of Air Test Systems burn-in systems is broadening out beyond silicon carbide at the same time that silicon carbide is bottoming. Okay, so you look at what they're saying about their business, and they just reported a slight beat of like 13 million of sales, and they're saying, and this was their first fiscal year, and they're saying we'll do at least 70 million of sales this year with at least a 10% margin. And so if you just sequence out what they're going to do, it goes 13 to 15 to 20 to 25 million. So it's a pretty impressive ramp, and the business is coming back, setting them up for 125 million next year, and then maybe 150 million afterwards. So what's going on is first is that silicon carbide is coming back, and as you have people are still developing electric vehicles. I mean, BYD is becoming one of the largest car companies in the world off electric vehicles, and sentiment's terrible on EVs, but companies are still working on them, and that is going to happen. At the second time, they're getting into gallium nitride, which is another emerging technology used in power devices that will allow your iPhone to charge in, several minutes instead of 30 minutes. And that technology is coming out in power applications, and that technology will use Air Test Systems. They also said that they have an AI product. It's probably something like an Intel processor. It's not going to be large volumes, but that these higher end chips are being tested in burn-in systems. And they also said they have won a hard disk customer. And so you're seeing their product market broaden out. And so there's lots of negativity in this stock. And you can really look at it and you can think, okay, in 1 to 2 years, this company will be making $25 to $50 million. And you could see the stock being north of $40. So I think this is still very interesting. It's at the early innings of the business turning around. So I think it's really worth paying attention to. It's a small cap company. It's as a $500 million market cap, but it trades and it's interesting.
So Russell, you mentioned the 10% margin. Are we talking gross operating net?
That would be like an EBIT in operating margin, but I think as the business scales up, I think we'll see that go north of 20%. And as the business, I mean, it's so interesting, right? Because at a very low level, the company is not losing any money, and as they scale up, I think these margins will just take off, and we'll be, they're saying at least 10% now, but we look out, then it goes to 20 to 30% because the company is very efficient and has lots of operating leverage. So that what makes it interesting.
If they do end up having some AI pull, of course, that margin should rise.
Yeah, it's just going to be about volume of testing. You'd love to see them get into like testing stuff like getting into wafer level testing for DRAM and large applications. It's just, I mean, the reliabilities you get into all this stuff is going to be critical as it goes into these AI.
They just reported. Our next report, right, 3 months hence. Do you think at this point, the street will start to get better? They'll beat and raise, and the negative narrative will flip?
I mean, trying to predict like sentiment, it's like they said the same thing last quarter, and the stock ramped to 20, then came right back down. So it's like trying to call the near term in the stock is super hard. But I think if we were to put ourselves in a box and emerge in 24 months, I think the stock's going to be materially higher. I think they'll continue to the company's been so beat up and scarred. I think they're being conservative in their guidance, which is why they're saying at least 70 million. So I think we're on the turn part, and managements that's been beat up are just cautious on getting too aggressive. But the tone is very positive.
Yeah. Well, it'll be interesting because, for all of us, the bulk of our covered companies are going to be reporting their results next week, maybe the week after. And Berna, I think you're definitely onto something. I'm, very interested to see what happens when Netflix beats and guides upward what's the reaction? Because last quarter, particularly for some of these aggressive growth and tech stocks, they had wonderful news on all fronts, and yet they still went down. So this will be
Yeah.
a real tell on those kind of names. And of course, that's primarily what I traffic in. So I'm really interested in that as well.
Yeah. Well, Paul, we also have, Taiwan Semi will report on Thursday, and they've given us the monthly numbers. And so revenue is tracking up 40%. Samsung is struggling. Intel is still struggling. And so you're looking at a situation where Taiwan Semi is becoming like the dominant provider at high-end manufacturing. And their lead to the rest of the industry seems to be widening. And the street has them earning $10 and then, leveling off at that level. The street could be way too low on what the earnings power of Taiwan Semi is, and trading at 20 times, year out numbers. I think still looks very interesting, and its biggest liabilities has, a lot of manufacturing in Taiwan, and people are super nervous about that. But if geopolitical tensions will come down,
Chinese have been rattling the saber even more recently, but we've been talking about that forever. I mean, as analysts, I'm not a geopolitical guru. How can we possibly, value that or consider that? I know it's a negative. I know it's risky, but I don't know. If you worried about that, you would not own this stock for years, and you would have been, suffering an opportunity cost, a big one.
Right. No, if Taiwan gets invaded by China, it's like all the semis would get slaughtered. But I don't think China wants to invade. I think they want to give them the slow bear hug and try to consolidate. But we'll see how that. I think that's a long-term issue, and Taiwan's expanding production capacities outside of Taiwan. So,
well, you guys, we have a hell of a lot of interesting stuff to look forward to on our coverage universes. So stay tuned. I want to hear back from you guys once you get through the pipeline of these events that you're describing. But until now, we'll keep it short and sweet today. I'm Paul Meek saying goodbye to all my buddies here at Wall Street Pete's Roundtable, Bernard Barchet, Russell Young. And you know what? We're going to see you tomorrow. Thank you, guys.